Most people think investing is only for the wealthy or for people with finance degrees, but the truth is anyone can start with as little as $10 and build real, lasting wealth over time. In this video, I'm going to show you exactly how to start investing, step by step, even if you have zero experience and zero background in finance. So stick around, because this could genuinely change your financial future. Let's start with the why. If your money is just sitting in a savings account right now, inflation is quietly eating it alive. Inflation averages around 3% per year. Most savings accounts give you less than 1%. That means every single year your money is losing purchasing power, even while it does nothing. Investing is how you make your money work for you, not the other way around. Step 1. Know why you're investing. Are you saving for retirement, buying a house, building an emergency fund, or just growing your wealth over time? Your goal determines everything: how long you invest, how much risk you can handle, and which type of accounts you should use. Someone investing for retirement 30 years from now can afford to take more risk than someone who needs the money in 3 years. So get specific. I want $500,000 by age 60 is a goal. I want to be rich someday is just a wish. Write it down, make it real. Before you invest a single dollar, you need a financial safety net. That means having 3 to 6 months of living expenses saved in cash in a high-yield savings account before you touch the stock market. Why? Because if your car breaks down or you lose your job, you don't want to be forced to sell your investments at a loss just to cover the bills. Your emergency fund protects your investments. Get that cushion first, then invest. Now let's talk about what you can actually invest in. Stocks. When you buy a stock, you own a tiny piece of a company. If the company grows, your investment grows. But stocks can also go down. Higher risk, higher potential reward. Bonds. These are basically loans you give to governments or companies. They pay you back with interest. Lower risk, but lower returns too. ETFs and index funds. This is where most beginners should start. An index fund bundles hundreds of stocks into one investment. Instead of betting on one company, you're betting on the entire market. Historically, the US stock market has returned about 10% per year on average. You don't need to pick winners. You just need to be in the game. For beginners, a simple S&P 500 index fund is one of the most recommended starting points by financial experts worldwide. Next, you need an account to invest through. If you're in the US, a 401k through your employer or a Roth IRA is where you should start because they come with major tax advantages. Your money grows tax-free or tax-deferred, which is huge over decades. If those aren't available to you, a regular brokerage account works perfectly fine. Platforms like Fidelity, Vanguard, or Charles Schwab are trusted, beginner-friendly, and have zero commission trades. Open an account, link your bank, and you're ready. Here's the most important mindset shift you need to make. You don't need a lot of money to start. You need consistency. Investing $100 a month, every single month, into an S&P 500 index fund starting at age 25 could grow to over $300,000 by age 65. That's the power of compound interest. Your money earns returns, then those returns earn returns, and it snowballs over time. The trick? Don't try to time the market. Don't wait for the perfect moment. Just start. Invest automatically, every month, and let time do the heavy lifting. So, let's recap. Set a clear goal. Build your emergency fund. Learn your options. Open the right account, and start small, but start consistently. That's it. That's the whole game. Investing isn't complicated. It's just a habit that most people never build. If this video helped you, hit that like button and subscribe, because every week I'm dropping more videos to help you take control of your money. And if you're wondering what to invest in first as a beginner, I'll link a video right here. Go watch that next. See you there.